On this week's episode of the Crushing Debt Podcast, the IRS wins again. So, welcome back to this week's episode of the Crushing Debt Podcast. My name is Shawn Yesner, owner and founder of Yesner Law, and I'm joined by your financial coach, George Corbello. How you doing, George?
Shawn, I'm doing extremely well. I have to say, one thing that I still am experiencing is this whole. My youngest is, getting ready. She's, the colleges. She's applying. She's doing all these kind of things, right? You would think she'd be more excited. She got accepted to one of her top schools, right? That she's looking to, and the girl was like, yeah, no big deal. Oh, it's. Oh, wow, I got accepted. I'm like more excited. Like, this is fantastic. Hey, this is great. And
Yeah.
she's like, it's a Tuesday. Move on.
Meh.
Meh. I was like,
Well,
but that's my life right now. I'm just like, I'm more excited than my kids about their future. Go figure. Yeah,
nice. Well, congratulations.
yeah,
That
it's
is
all
a
good.
that is a tremendous accomplishment. I remember looking, I found some of my old stuff, and I remember looking, FSU was not the first college that I was accepted to. But
Hmm.
once I was accepted, I knew that that's where I was going to go. Actually, the first college I was accepted to without even ever having applied was Alabama.
Oh, okay.
University of Alabama sent me a letter. I think it was one of those things where I don't know if the SAT still does this, but you could check, please send my scores to whatever
Just
schools.
anybody.
And so I had them send my scores to a couple of schools, FSU, UF, all those schools.
Right.
And yeah, I got a letter from Alabama saying, "Hey, we liked your SAT scores. We want to offer you a position here at the University of Alabama." Um,
Nice.
I think I had too many teeth to qualify to attend the University of Alabama.
Jeez. All right. All right. I thought you were gonna say like I got my first school was Florida.
No, I did get into Florida, and I took out a red and a yellow pen, and I wrote NO, and I sent it back.
Fair enough. Fair enough. Love it.
Start started early. So anyway, we do have a guest on this week's show, so I want to get to the introduction of our guest. She is the founder of Attorney Legal and focuses her practice on federal tax law and international tax matters. She provides services in business tax planning, tax transactions, tax consulting, and tax controversies for a wide range of clients, including businesses, partnerships, corporations, LLCs, private equity funds, single purpose entities, and individuals. She's got 15 years of experience in public accounting, a strong background in tax compliance, tax planning, and tax dispute resolution. Before becoming an attorney, she worked as a CPA, assisting clients in industries such as asset management and real estate, McDonald's franchisees, professional services, investments, and construction. She
Nice.
also worked at leading Big Four accounting firms like PricewaterhouseCoopers, KPMG, where she provided tax services to billion-dollar clients in asset management. As a tax manager at KPMG, she managed complex private equity funds and multi-tiered partnership structures, ensuring compliance with complex tax laws and regulations and meeting time-sensitive deadlines. Welcome our guest, Alena Miles. Welcome, Alena.
Thank you. Good morning, everybody.
So, as you can tell, Alena's not from here.
Originally not,
Originally not. Where are you from originally?
So I was born in Belarus, and for those who do not know where that is, it is Eastern Europe.
So, how long have you been in the U.S.?
I've been in the US for quite a while now, 25 years, and all my schooling and everything is from US. Yeah.
Yeah. You went to, so you got your Bachelor of Science at USF here in Tampa, Masters of Accountancy and Taxation at USF, and then you went to Western Michigan, Thomas Cooley Law School for your JD and an LLM in taxation. So, for those who don't know, an LLM is kind of like a master's degree in law. It's another
Master's of Law.
advanced degree in law, and so you've got your basically law master's degree in taxation. So,
Wow.
you know a lot about taxes.
Yeah, I try to tell people that LLM in taxation would be the highest level of law degree you can obtain, and its specialty is taxation. Even though I focus on taxation. That's the right way to say it.
Do you know? So I know that attorneys can be certified by the Florida bar in different specialties. There's a real estate law
Yep.
certification. There's probate and estate planning certifications. There's other types of certifications. I know bankruptcy has a certification. Does tax have a
Yes,
certification?
tax has that certification. I'm not a board certified attorney in taxation. You have to practice, I believe, for 5 years before you can apply to get that Florida Bar board certification. But that's right, there is that option there. I will be going for that option. I can tell you for sure.
Nice. I did apply to be a real estate board certified attorney. You had to take a test to be board certified in real estate law. And in order for me to be board certified in real estate law, I got to take the test again.
Okay.
The
That's is that an easy, or is this kind of like,
no.
okay,
I
so then
remember
there
when
you
I
go. So
studied
something to look forward to.
Yeah, no, when I studied for the bar, I remember them saying, these are the things they're going to test on the bar exam. And here's sample questions from the bar exam. And here's what we think they're going to talk about. And here's what the questions that we expect. And here's how you can answer the questions, blah, blah, blah. When I took the real estate board certification, they were like, we don't know what they're going to ask. Here's some stuff they might have asked in prior years, but we don't know if
Right.
they're going to ask this stuff again. So good luck, everybody. And they just
know your stuff, please.
there was no, like, for the bar exam, there's bar review courses,
Right.
there's books, there's manuals. For the certification exams, there's very little.
Wow.
I remember when I took the test, the first essay question that I answered was about real estate law ethics. And I answered the question, and I was so proud of myself. And I walked out of that test thinking, my answer to the ethics question is going to be the answer key that everybody else's test is based on. From there, everything went downhill quick. I remember they used to say that what they did every year was they would test a settlement statement. At the time, it was a HUD statement, or now they're called closing disclosure statements. And I thought, I've been doing real estate and I've been doing closings for years and years and years and years. And so if they ask me a question about the HUD or the closing disclosure or whatever it was called at the time, I'm going to nail it. The year I took the exam was the first year in like 30, 40, 50 years that they did not ask that type of a question.
Wow.
So
there you go. You just don't know. You just don't know. They actually, I think I saw it on the internet, Shawn. They actually use yours as a way of not answering the questions on the exam.
How
so
not
here's
to
not
answer.
how to do it, guys. So
right. They looked at my answers and they said anybody that picked opposite of Shawn passes the exam.
They had a background noise. They went wah, wah.
Right. So taxes. And so one of the reasons I thought Alena would be a great guest, and Alena's referred me some people, and I've referred some tax people over to Alena. And I think the reason that she would be a very good guest, she will be a very good guest on this week's show, is because she does know a lot about tax. And the where our two worlds collide is that the general proposition is that income taxes are not dischargeable in a bankruptcy. In other words, bankruptcy will not get rid of your tax liability. Now, it may in some cases, and we can get into that, but generally, what kind of taxes do you see that people have problems with that they want to try to eliminate, negotiate, whatever?
Yes, typically, what I see is one example of what I see is payroll tax, right? Payroll tax is trust fund tax. If we're talking about some a portion of tax that is being withheld from an employee's paycheck, right? That portion of tax is not your tax. Not sending that portion of tax, for example, to the government is theft of tax, because it's not your tax that you are being assessed on, right? So that type of tax, trust fund portion of payroll tax, which is the amount of money being withheld from people's paycheck, from your employee's paycheck, is called trust fund tax. That's definitely not dischargeable in bankruptcy, as far as I understand, because that's not your tax to even begin with.
Right. So what you're talking about is me as the employer. So I have four employees, if you include me. There's 4 employees at Yesner Law. And so Shawn Yesner, as the individual, has whatever amount of money withheld from my paycheck that the law firm pays me for the taxes that go to the IRS. And that's, if there's more tax that goes to the IRS than I should have paid, that's where I, Shawn Yesner, individually get a refund. But if I'm understanding, the tax you're talking about is Yesner Law
Correct.
has to. So when Yesner Law withholds the tax from Shawn's paycheck,
That's right.
Yesner Law has to send that money to the IRS so that the IRS has it to issue the refund.
Exactly. And so if Yesner Law does not send that money to the IRS, that's theft of tax, first of all. And second of all, that portion of that tax is typically not dischargeable in bankruptcy.
And if I recall correctly, it's not only so if I had to file bankruptcy, but Yesner Law had not remitted the trust fund taxes, the payroll taxes, I think I'm liable for that as an individual, as the owner of the LLC law firm.
Exactly, but it's not limited. Exactly right. It's just not limited just to the individual owner. Like if you have somebody, CFO or whoever else who is in control of the payroll procedures at your law firm, that person as well, not being actual owner of the firm, that person will have personal liability for the trust fund portion of payroll tax.
Wow. So it's both the owner and if I had a CFO that was running the law firm, that person also.
Exactly. If that CFO has authority to sign off on payroll checks and payroll and stuff like that.
And I know actually, so I do all the payroll reporting for the law firm. That's something we're working on. Going back a couple of weeks, we talked to Tiffany about her new book about saving time during the day or saving time at work. That's one of the things I want to try to outsource is the accounting of the law firm. So that'll buy back some of my own time. But actually, I did one time. I did submit the payroll taxes. I just submitted them late, so they're due by what the 15th of the next. Oh no, they're due. Yeah, they're due by the 15th of the next month, right? Or something
So
like that.
if you check payroll tax deposits, they
I can
are
see why you want to, kind of farm it out there, buddy.
Yeah. QuickBooks tells me. I don't know.
yeah, you have to promptly submit your payroll tax deposit. But if you're talking filing 941s, like the payroll tax, I think that's what you're talking about. Those are due by the, I believe, 15th, the next month, followed by the, if the quarter closes on September 30th, I think you're talking about 941 due October 15th or something like that.
Well, I remember one time getting a letter from the IRS, which is lovely when you get it. The only letter I like getting less than a letter from the IRS is a letter from the Florida bar.
Yeah,
But-
either one of those would be bad. Mine's was like, I remember getting it. It was like hot pink paper. They were, you could tell it was just like Mayday, we got a problem, and it was just like
Yeah.
very scary paper for sure.
Well, and the paper that I got said you submitted I think it was the 941 return that reports the amount of the payroll tax. I submitted that late, but then the IRS said this is the first time you've done it. You've submitted on time every other month, and
Mhm.
so we're going to let this one slide, but don't do it again.
A little
Oh,
advice
nice.
for you is that if you do plan to outsource your accounting side of things, do keep an eye on payroll tax deposits. There is a way to register with the IRS to create an online account so you can make sure that whoever does your payroll, whether it's a payroll company, whether it's a CFO or whoever you have, that payroll tax deposit, which is that trust fund piece that I was talking about, is being transmitted timely to the IRS. You want to make sure you keep an eye on that procedure.
Got it. I do want to give out real quick your contact information. So if anyone wants to get a hold of you, your website is taxattorneylegal.com.
That's right.
And then I know I have your email because I send you a bunch of emails, but your email address again is
A Miles, so AMILES at taxattorneylegal.com.
okay. Yeah. So it's taxattorneylegal.com, A Miles or www if you want to go to the website. So what happens a lot of times in a chapter 13 bankruptcy, a payment plan bankruptcy, the debtors who file the bankruptcy they are required to be current on their returns, and they're required to file their returns every year while the Chapter 13 is pending. So what happened? And a lot of times I'll get clients that come into my office and they say, well, I need to file bankruptcy. And I'll say, okay, well, it's got to be a Chapter 13 for one reason or another, and you need to have your tax returns current. When was the last time you filed returns? And they'll say to me, 4 years ago, 5 years ago. I had one person say 10 years ago. They had 10 years of outstanding taxes. What would you suggest in a scenario like that, where it's somebody that hasn't filed a tax return in a while, but they may have been required to?
Okay, so there are quite a few reasons why, even if you owe a lot of tax, even if you're scared to come out and show and file your tax return and show that you owe a lot of tax, you do want to file your tax return. And it's not just bankruptcy specific. One of the reasons is statute of limitations, right? So if you never file your tax return, the window of opportunity for the IRS to go back after you is open. In other words, if you've never filed your 2009 tax return, statute did not start running, which means they can go back to 2009 and audit. Also, they can force to file your tax return for you, but that's not going to be in your favor. Okay.
Yeah.
So there are multiple reasons outside of bankruptcy, no matter how much tax you owe, to file your tax return.
Yeah, I actually have that issue happening in a couple of bankruptcies now, where the clients submitted their tax return, but for whatever reason, the IRS never got it, or the IRS didn't index it properly, or maybe they really didn't submit it, whatever. And so the IRS will file a claim and they'll say, unfiled returns for the year 2022. And then they'll just make up a number of what they think the taxes would be that year.
So let me give you a very simple example of where, if they force the tax return, the filing of the tax return, it's not going to be in your favor. Let's say Yesner law is sole proprietorship, right? It's not an S corp, it's not partnership, it's just sole proprietorship. And gross revenues from Yesner law, let's say, is, in my example, $1,000. I mean, it's obviously theoretical.
Yeah, we would be shut down with $1,000, but I get it.
Okay, $1,000 a year. But Yesner law has a lot of expenses to record, right? So office supplies, computers, pens, pencils, softwares, and such. They're not going to deduct that against the gross revenue, right? So you're going to pay tax, in my silly example, on full $1,000 because they're going to force it, and 1,000 is what they're going to record. Now you're going to say, well, what about my deductions? The things that I just mentioned. They're not going to put your deductions in there for you. That's your job.
No.
So that's one simple example where, if that's where to happen, it's not going to be in your favor. So file your tax returns.
Yeah, I think that's always a good idea, is just, even if you owe, file the tax returns to start the statute of limitations so that they cannot audit. You may still owe money, but at least you're starting the clock to prevent them from auditing.
Let me just clarify that you cannot prevent them from audit, and there are circumstances where they still might go and audit, but at least it keeps the window of that opportunity for them to audit you narrower.
Right.
There are, other criteria that they would have to meet to audit so many years back, like fraud and stuff like that.
Right. Have you negotiated IRS debt before?
Yep, I have a lot of cases where I am helping taxpayers with various controversy options, such as offer in compromise, installment plan agreements, and so on, to help them negotiate IRS debt. But now with the government shutdown, it's a little bit delayed, if you will. But
Right.
so a lot of it is still in progress.
Yeah, I know we're still, as of the recording, we've still got the shutdown. When this episode comes out, who knows what the status will be. But yeah,
Right.
I'm even in bankruptcy court. I'm also feeling the effects of the shutdown. The United States trustees are slow to respond because they're being furloughed. Some of the bankruptcy trustees are saying they're not getting, the local trustees are not getting paid because of the government shutdown. it's really affecting everybody.
Another thing that I help taxpayers with is penalty abatement opportunities. Okay, so like if you owe a lot of penalties, there are procedural steps you can take to try. There's never guarantee, but you can try to abate penalties. So once again, due to the government shutdown, those processes are delayed, and that's just, there is nothing good for the taxpayer in terms of this government shutdown. Your interest keeps growing. You have to comply with statutory deadlines, tax compliance deadlines, and it's just nobody to kind of fight the case with on the other side,
Right.
Crazy.
or it's limited. Sorry.
So
Let me ask this. I mean, a simple, because you got two attorneys. You guys are too smart for me itself. So I'll say that. But can you tell me again? Obviously, working with a CPA, working with a tax attorney, what's the difference in regards to these types of situations that can kind of, me understanding like who do I go to in what situation?
Yeah, that's a great question. So the biggest difference between attorney like myself, tax attorney, and
Hmm.
regular CPA, because remember, I'm a tax attorney with CPA credential, right? The biggest difference is attorney-client privilege.
Ah,
Okay. There is no such thing with the CPA. Okay. And so, what does that mean? So, in simple terms, attorney client privilege, which applies to not just tax attorney client relationships, but bankruptcy attorney, any other attorney. But in case of litigation, right, if I am subpoenaed to testify against my client, the communication between me and my client, me being an attorney, is privileged. Okay, this is a general rule. There are exceptions and such, but generally speaking, there is no such thing with CPA. There is no such thing with bookkeeper, EA, whoever else. So that's just the uniqueness, the unique thing between attorney and the client.
now I know that CPAs can represent clients in tax court. But so my dad, I'll give you a little bit of background. My degree is in accounting, although I tell people it only qualifies me to run a calculator. I did not get the master's degree, so I'm not even eligible to sit for the CPA exam. But my father was a CPA for, gosh, 50-ish years. And he used to tell me as a CPA, he's qualified to represent clients in tax court. He just chose not to do it because he was a CPA, not an attorney.
So on that point, as far as I know, you have to pass certain exam. Not every CPA is eligible to represent the taxpayer before the tax court. But my question to you is, taxpayer, why would you want to hire a CPA? It's the attorney-client privilege in that scenario. I don't even know, because why would you not go to an attorney?
Right.
But to your point, yes, I believe not every CPA, but if they pass certain exam, it's possible that they could. My question is, why would you want to go that route? I don't understand it, but it's there.
The only reason that I could think is that the CPA theoretically would have been the one to prepare the return. So the CPA could speak to questions about why did we take this deduction? Why did we reflect the information this way? But
right.
The counter argument to that, if there is a problem already, if the case is going to tax court, why would you want to open that can of worms? I don't know. I don't understand that, but yes, it's an option.
I would always advocate, if you're going to tax court, if you're going to any court, I would
Any court.
always advocate to have an attorney
Makes sense.
represent you.
In other words, what you would be saying is that why do people go to law school if you can hire CPA to go to court?
Right.
Why would you go to law school? Why would you go through that schooling if you can go and hire? Like, there is a reason, right? There is a reason we are attorneys, and we learned what we learned.
Well, and again, my dad had no desire to go to tax court. He stayed in his lane as a CPA, and that's what he did.
But what CPA does that the tax attorney doesn't do, for example, is bookkeeping. Bookkeeping, they do audited financial statements. So audited financial statements is where, like, if you want to apply for loan, right, commercial loan, residential loan, or whatnot, you would probably want to present a copy of audited or reviewed or compiled financial statements to the bank. So that's strictly CPA thing. They do that. Like tax attorney, I don't do that. Bookkeeping, that's CPA thing. But tax related stuff, especially if the case is going to court, uh, I don't know.
And you do prepare tax returns, right?
Correct.
Okay. Well, go ahead.
Yeah, so like if, for example, if somebody comes to me with the tax problem, and not everybody comes to me with the tax problem. Some people come to me when they want to be ahead of the tax problem. They come to me for
Ooh, that's good.
planning, for tax strategies.
Right.
But let's say they come to me with the tax problem. I look at the tax filings and say, for example, you have a mistake in your whatever tax year tax file, and I recognize there is a mistake. We can go ahead and amend your tax filings while working on your controversy problem, while we are resolving your tax debt, for example, right? And so I don't have to outsource that work to anybody else. I can go ahead and amend the tax file in my simple example.
Nice. See, there were two. I had a question before that, and then you sparked up another question. So but let me ask the first one. So, like, what are some of the common mistakes you see with clients that kind of make debts, the tax debt worse? Like, what are some of the things that you can do to kind of like, like I have debt, I have this tax bill itself, but doing these things make the situation worse before they come to you, kind of thing.
The biggest thing that people do not understand is, let me break it in two pieces. When you file extension, let's say if we're talking individual tax return, April 15th, that extension is extension to file your tax return, not extension to pay your taxes. Your taxes due April 15th. It's not due October 15th. Okay. That's the first point. Second point, the percentage and amount of penalties is way smaller if you file and report your tax, everything on the tax return. So for example, if you owe $100,000 in tax, you're saying like, oh, I'm scared to file my tax return. IRS is gonna know I owe $100,000. No, file your tax return and basically resolve your tax debt as step two. If you never file your tax return, that's the biggest mistake. Your debt is not going anywhere. It's still there. But the amount of penalties because you didn't file your tax return is now way more. So that's
Sure.
the biggest. Another one is another one I see, if we're talking specifically on the topic of trust fund taxes, is people delegate that task to somebody else. That gets missed, and the amount of penalties is humongous on that. And international tax, I just want to quickly mention that. International tax is not something God knows where, you don't know where. It's international, it's in Europe, it's somewhere else. No, if you're a US citizen, US resident, US tax resident who has foreign bank accounts, it's possible you missed your FBARs, for example. If you have foreign businesses, it's possible you missed international tax forms. If you did, the penalties are draconian. So, and statute doesn't start running until you amend and file it correctly in terms of those international tax forms. So those are the biggest I can point out right now.
And you mentioned tax planning before. And so one of the things that I've always done is I don't like getting a refund. I try to make that refund as close to zero as I possibly can. Or maybe it's a refund of a couple of $100, or maybe I have to pay a couple of $100 at the end of the year. What about tax planning can you help with? Because my thought process is, if I get less of a refund at the, at the beginning of the year for filing my tax return, well, that's more money in my take home pay throughout the year. More money. So I had a client yesterday. We were going through chapter 13. We're getting ready to file a chapter 13 plan. And I noticed that they get refunds of anywhere from $6,000 to $8,000 a year. And they were about $200 short of where I wanted them to be in their budget to make the chapter 13 plan work. And so one of the things I said was adjust your withholdings so that you have maybe a $1,000 refund or a $1,500 refund, and that'll put $400 back into your pocket every month that now we can use to fund this Chapter 13 plan.
So to that point, we are right now in October, right? Today is October 31st,
Right.
2025. So we still have November, we still have December to implement tax planning strategies. One of the strategies your client or whatever can implement is bonus. When you pay yourself, let's say Shawn Yesner, law pays Shawn Yesner a bonus and bumps up withholdings in December 2025. It's kind of allocated evenly, if you will, for the purposes of estimated tax penalty purposes. So curing that shortage, let's say, in withholding tax through bonus, if you take that bonus in December, is fine. That's one of the tax planning strategies, if we're talking in simple terms. Another thing to point out is there are a lot of tax planning opportunities with the Big and Beautiful. Big and Beautiful was signed into law in July 2025. There are good tax savings opportunities there. For example, if you're buying a rental property, right, go do cost seg study. When you do your cost seg study, hopefully you'll have a piece of a portion of the cost that you spent on that rental property to be allocated to assets that are immediately depreciable. 100% write-off immediately. That lowers your taxable income. So that's another thing to consider. So it depends on what your situation is. It depends on what your case is. But there are a lot of tax planning opportunities, especially right now.
Yeah, we should probably have George. I know, don't we have a cost segregation person in our network? We should probably have someone like that on the show. So what Alena's talking about is if I buy an asset for the business, the tax law says that asset has to be depreciated on a certain schedule, and the depreciation is a deduction that I can take on my tax return. But if I can take that asset and for purposes of taxes, break it up into other different types of assets. Like if I have a restaurant, it's not just the restaurant, it's the land, it's the building, it's the refrigerators, it's the tables, the chairs, the menus. If I can break it up into that kind of stuff, those different assets may depreciate on a different schedule. So I can take more deductions faster to have more, to have a lower tax earlier because of the way I'm classifying. Instead of saying I got one big asset, I have a whole bunch of other assets that all depreciate on their own schedules.
That's exactly right. So a depreciation is a non-cash deduction, immediate write-off, if we're talking bonus or Section 179, against your taxable income. So by utilizing that cost seg strategy, why wouldn't you want to depreciate and immediately write off if you can, obviously in accordance with the tax law? Why wouldn't you want to go that route? Do not underestimate the value of cost seg. Yep.
Right. Right. So one other thing I kind of wanted to ask you about too, one other thing that I've had questions time to time, I've tried to refer you a couple of them from time to time, FIRPTA.
Yep.
FIRPTA is FIRPTA. Do you know what it stands for, George?
I thought you burped, but what's it stand for? I don't know.
FIRPTA is the Foreign Investment in Real Property Tax Act. Basically, FIRPTA is the law that applies whenever a foreign person wants to sell U.S. property. So I'm going to stop describing it and I'm going to let Alena take over.
Yes. So once again, FIRPTA is an example of international tax, which is basically withholding tax that is being triggered, and the property is U.S. real property. So it's not somewhere there in Spain. It's not somewhere there in Europe. It's here. So if you are the buyer and you're buying, let's say, a house here in Clearwater, we're in Clearwater, right? In Clearwater, Florida, from a foreign person, FIRPTA is being triggered. Now, the natural question is, who is foreign person, right? So if you have a dual citizen of US and citizen of, let's make up a country, Shawn, which country do you like?
Let's do Russia.
Russia.
Yeah.
Okay. So if you have dual citizen of, I'm going to say Belarus and US, right? That's not foreign person for FIRPTA purposes. Okay. When you have strictly Belarusian person who is citizen of Belarus, has nothing to do with the US, that's possibly a foreign person for FIRPTA. So there is big distinguishment there, because I had somebody ask me like, oh, they have dual citizenship. Is FIRPTA? No, no, no. Has to be somebody who is truly foreign person for FIRPTA purposes.
Is it based on citizenship? I mean, what if the person is here on a work visa or a permanent resident status? Does FIRPTA still apply if they're not a citizen, but they're on some other kind of immigration status?
Yes. So my understanding, and it's, you have to look into the code and double check on all that. But my understanding is that if you have a green card, which means you have permanent residency, that's not FIRPTA foreign person. If you meet the substantial presence test, in other words, if you just on a visa, whatever visa you make up, J1, F1, whatnot, but you spend so many days in the US, you're considered US tax resident. So once again, have to double check the rules, but generally speaking, those are not foreign for FIRPTA.
And FIRPTA's, like you said, it's a withholding requirement. So I remember I did a closing a while back where we had to withhold, because the interesting thing, and my understanding of this was the interesting thing, it's the buyer that has to ensure the withholding, or even sometimes the title company or the closing agent. And what I was always explained, the logic behind that was, well, if you're a foreign person and the IRS were to say you have an obligation to withhold the money, but you don't do that, and then you leave and you go back home to your foreign country, the IRS has no way to reach out and get that tax from you.
So that's exactly right. Go ahead and chase the Belarusian person who left, sold the property here in the US, didn't pay tax, for example, left to Belarus. How is IRS going to find that person and tax that person? There's no way. So they're putting an obligation on the buyer. Now, in FIRPTA case, it doesn't matter who the buyer is. The buyer could be also a foreign person. It's not being triggered by the buyer. It's been triggered by the seller, who the seller is. But ultimately, you're correct. It's tricky because it's the buyer who has personal liability for the FIRPTA money, which is seller's money. It's not the buyer's money. It's seller's money.
Interesting.
So if the IRS were to so I know that there are people, tax attorneys, CPAs, other people that either can send an application to the IRS prior to closing and say, here's why FIRPTA does not apply, or here's why the FIRPTA withholding requirements do not apply. There are some other general rules, like you said, in terms of residency and the use of the property and that kind of stuff. But in the worst case scenario, if there are tax monies withheld, it is the seller's money. So the seller would just have to file a return to pay the tax and get that money back.
So it's withholding tax, and generally speaking, the tax rate is 15% of the gross selling price, not of the net gain, gross selling price, right? There are exceptions and all that. We're just talking general rule. But that's exactly right. It's withholding tax. So to get that money back, seller would have to file US tax return if there is something to get back.
Right.
Okay. So if it's a $2 million property and 15% FIRPTA is being assessed on $2 million, that's huge. It's most likely that they're going to get a big chunk of that money back. But how do you technically do that? You do that through filing US tax return for the seller. Now, I just want to circle back to the exemption certificate point. Those things, there are tricky things with those. Like those things can get denied 3 years later. And if they do, guess who is being punished? The buyer.
The buyer.
Because the buyer is going to be assessed penalty.
Or potentially the title company, I think.
Potentially, yes. But ultimately, the personal liability falls on the buyer.
Right.
Yeesh.
Well,
so all I heard there was I can leave the country and I can try to get away from the IRS. That's all I heard, but that's just me.
No. As a U.S. citizen, U.S. resident, or U.S. tax resident, you're taxed on the worldwide income. We're talking about foreign people.
Gotcha. All right. Well, like I said, that's why you guys are the experts, because all I heard was run.
George is from the great country of New Jersey.
Yeah, exactly. That's what to say. You didn't hear the accent.
So
It's all good. It's all good. No.
if George has foreign bank accounts that he hasn't disclosed, okay, he can come to tax attorney Alena Miles.
Ah, now that we're talking. Now we're talking. All right.
Potentially.
I'll start working on those things. But yeah, that makes total sense. No, it's amazing where, obviously situationally you're trying to, again, having the experts in your corner to be able to understand again what the situation is, especially again being foreign or just again just being in a situation where you're stressed out. You're going to be very stressed out if you have the IRS coming at you. What if the business is in a certain situation? It's good to have someone who understands exactly how this works to be able to get you out of this situation that you're in.
Exactly. And government shutdown or not, your interest keeps
Right.
going and there is no escape of that.
So anything else? Any other questions, George or Alena? Anything you wanted to touch on that we didn't ask you?
Yeah, I just wanted to touch base on circle back to trust fund tax because payroll tax was one example of trust fund tax. Another example would be Florida sales tax. Okay, we have a lot of businesses in Florida that are subject to sales tax. Convenience stores, car dealerships, smoke shops, vape shops, those
Mm.
kind of things. They all have to pay sales tax. And if they remit sales tax from the clients but never send it to Florida, that's theft of tax. So to circle back to the bankruptcy and trust fund tax rules, that trust fund tax might not be dischargeable in bankruptcy. That includes other types of trust fund tax, including Florida sales tax.
I had to register for sales and use tax when I published and started selling the Crushing Debt book.
Okay.
So once I got about 100 episodes in the podcast, I took all that content and I transcribed it and I put it together in chapters, put it together logically, wrote some transitions, and that became the Crushing Debt book. But I didn't realize I had to register for sales tax because books are taxed. And
Yeah.
so now every quarter I have to submit a sales and use tax return to the Florida Department of Revenue.
Interesting.
And I would say, maybe once every couple of years, I actually have to remit sales tax. I don't sell a lot of books, or if they sell through Amazon, Amazon collects the sales tax and all I get are the proceeds from the book. So most times I just have to report, here's what the law firm made revenue wise in the quarter. It's all exempt, zero tax owed. Here's my return. I'm tempted to try to call the Department of Revenue and say, how do I stop reporting if I'm not really selling books anymore? But then I get an order of 200 books that I want to sell. So
It's
we'll figure it
endless
out.
cycle.
Yeah, and another example would be Airbnb, right? If you have short-term residential rental. Now, to circle back on rentals in general, there is no effective October 1st, 2025. Sales tax on commercial rentals has been repealed, but there is still sales tax on short-term residential rentals, such as, for instance, Airbnbs, right? So those are more complex. Another example of more complex sales use tax is called fuel tax. Like if you have fuel tax dealers, right, that resell fuel, that's a niche in its own. So there are more complex sales use tax industries and examples to point out if people deal with those.
Craziness.
Any other questions, George?
No, I love the guest. Learned a lot. Like I said, I usually get worried when I get into a room with attorneys, but it seems like you guys are very sweet and very understanding. But again,
Alena is not me, but
yeah.
Alena is.
Well, I'm trying to be nice to you, bro. But yeah, I
Thanks.
guess excluding the host. Yes, I would agree with that.
There you go. Well, we do again want to thank Alena for being a guest on the show. If
Yes.
you want to get a hold of her, again, her website is taxattorneylegal.com. Her email address is amiles@taxattorneylegal.com. We'll put all those links in the notes. Other than that, you know what you do not have to pay sales or use tax on, to my knowledge?
What's that?
A donation to Patreon.
Nice.
So
I
if you
like
go
that.
to patreon.com/crushing debt, you
I
can
like it.
make us a donation that I don't believe we have to pay sales and use tax on. And that, of course, always helps us to fund the show.
Grow.
We've also got the Pan Can Walk
Mhm.
coming up in April of 2026. So if you want to join my team, again, the link will be there in the show notes. You can always join our team for the Pancreatic Cancer Walk. Other than that, thank you, Alena. We appreciate you being a guest.
Thank you, guys. It was my pleasure.
And I know that Alena can help our clients, our listeners, all of you listening out there have more money at the end of the month rather than month at the end of the money. And we will talk to you in next week's episode.